morning everyone. Welcome to Banao Bharat's Trading for Living Thursday expiry live session, 8th of June, and one of the big event day. One, it is an expiry, and two, there was a RBI policy today. So interesting development happening in the markets. As expected, there was no rate change in the RBI policy meeting today, and secondly, there were no big surprises in the governor's speech as well. There was nothing to take home either in kind of any important information, just that the RBI governor expects inflation to be slightly on the higher side, and there will be measures to curtail the inflation, but then at the same time there is no reason or compelling reason for increasing the rate hikes further. So that was the message by the RBI governor. And based on our charts, what do we infer? Well, first let us look into the Bank Nifty itself today. Bank Nifty, we all know, we are closely watching 44,525, which is of last week's high, which was a critical for our weekly settlement also. And today, after the policy meeting, you can see here Bank Nifty exactly comes back from that level of 44,525. Opens in the morning at around 44,346. From there on, the policy meeting was at 10 o'clock, and by 10 o'clock, Bank Nifty also hovers around 44,500. For one brief candle, it just touches 44,525 and makes a high of 44,545, and now currently trading at 44,400, which means on the settlement week chart, we had communicated earlier also. On the settlement week, 44,525, which happens to be the last week's high, will act as a resistance. Whether it will cross or not, we don't know, but definitely based on past data analysis, in this kind of a pattern, the high will act as a resistance. So it has exactly played out that way, and today being the settlement, it may not once again cross 44,545 until unless it takes out, at least on the intraday basis, 44,350 levels. So on an intraday basis, if you see, it has come back clearly from the weekly push down, and on the intraday basis, today's low will act as a support. So if today's low is acting as a support and today's low is very close to yesterday's low also, if in one single candle it breaks 346 and 300 as well, then we need to be skeptical about the support levels. Otherwise, you can take small positions for the long side once it cuts 44,346 levels. So on the intraday basis, today being the settlement, there might be one spike on the upside also if it try to cut and hold on to 44,350 levels. This is the chart of Nifty. Nifty, yesterday there was a weekly resistance which was taken out, very similar to Bank Nifty. Nifty also had a last week's high as a resistance at 18,742. So that being the case, it tried to go up, and yesterday it closed above the resistance of 18,742. Today makes one more high at 18,842, and now is coming back. So will it come back below 18,742 and close below 18,742, because that is where people have started taking the positions. So mostly likely Nifty will come down below 18,742 and start closing below 18,742, but Bank Nifty has one intraday support at today's low of 44,346. So we need to wait how that gets played out. On the intraday chart, Nifty has made a high of 18,842 and has started coming down now, and there is some good volumes also getting played out here. So just wait for the new entry levels. If it comes to 18,706, That is where the new entry level is for Nifty on the intraday chart. So on the intraday, the buying can come in Nifty at around 18,700 and for Bank Nifty at today's low of 18,346. So that is with respect to the charts today. Coming to such days, as a technical trader or as a trader, what do you do on events day? In fact, in some of the videos I have told earlier also, no matter what events are getting played out, there will be some of the other events getting played out at all times in the markets. That is how the market functions, based on different perceptions on a certain event. So in fact, if you are a technical trader, or being a trader, mostly 90% of the traders are on technical basis only. Either they use the chart patterns, or they use the indicators, or they use some data patterns, or they use some high frequency models. So whatever the model that you are using on any events day, do not stop trading. That is what is my suggestion. If you have your setups, and if your setup is being played out on that particular day, and even if it is conflicting to your the events that is getting played out, do not look into the events and just trade on the side of the setup that it is being displayed. In the sense, if your setup is showing long, play on the long side. If your setup is showing short, play on the short side, irrespective of what events are there. In case sometimes if you psychologically perceive these events are big, then in those cases the thing that you can do is reduce the quantity to either 50% or 25% of your book size. You can do reduction of your book size, but do not avoid trading at all because of some events. Once you start avoiding trading because of some events, then you will start noticing every day there is something or the other event that is getting played out, and it becomes little difficult. Especially in the coming days, you will see almost expiry days happening in all the weekdays except for Monday. For now, there is a weekly expiry going on for Fin Nifty on Tuesday, mid cap index on Wednesday, Nifty on Thursday, and in the coming days you will see Sensex, BankX and Bank Nifty going into expiry on Friday. So it's going to be challenging if you start avoiding the expiry days, or if you start avoiding the events, or if you start waiting at this time whether it will work or not, you don't know. Instead, if you think there is risk, then reduce the risk, but don't avoid the game itself. As a trader, you should be always aware of the pitfalls. No matter there is no event, still your setup might fail on that particular day. So there is always a possibility of a loss on any trade that you take. The moment you take a trade, you are sitting on a risk. So the moment you take a trade, you are sitting on a possibility of a loss trade on that particular day. So do not get carried away by your losses or profits. Instead, keep checking your system. My system said buy and I bought, but after that it came down. How often is it doing it? Where is my entry level? Should I to fine tune my entry level? Should I to fine tune my exit? Should I to fine tune my stop losses? So these are the parameters that you have to keep working on day in and day out, and come with a fairly robust system. We cannot devise a very precise system because there is no system which you can work. The market doesn't work based on any particular precise system actually of your entries, or in terms of your stop losses, or in terms of your good targets. If you have a fairly working system, that is good enough for you to go ahead and start your trading journey. Instead of waiting for a perfect situation to emerge, you can just go ahead and start off your trading journey and learn as you go on. Learning never stops. Learning is always there. So you need to just keep moving forward, put your feet into the waters and start swimming, and you will learn a lot more by your own trades than anybody's lectures or anybody's viewpoints. And also remember one thing, market participants do not play the outcome of the event. Many a times people think people play the outcome of the events, but based on my so many years of experience and observation of the markets, I always felt people who are thinking like they are playing the outcome of the event, actually they are not. Sorry, I think the stream got slightly disconnected. I'm not sure if you people are getting the stream once again. So I was just saying like market participants do not play the outcome of the event, market participants play the event itself. All of those people who play the event, not necessarily they know what is the outcome of the event. For example, there is a RBI policy today. All the market participants who are taking some positions, they are not expecting whether the rate hike will happen or not happen, whether there will be a neutral stance, what will the RBI governor say. Nobody actually knows, but still those people, they play the event not knowing the outcome. Not knowing the outcome based on, they know like on Thursday there is a RBI policy, so Monday onwards they will start taking a position based not on what will be the outcome of the event, but based on their data and their own experiences of so many other things. They know for sure that they don't know what the RBI governor is going to say on that particular day. The same with any corporate results, any quarterly results or half yearly results or annual results. Nobody knows for sure what is the results of Infosys, but they know on April 10th there is going to be a Infosys results. So 10 to 20 days before, people will start taking positions, not necessarily knowing what is the result that is going to be on the result day of Infosys, but they know there is an event coming up, so they play the event. Please remember, or please observe, start observing on these lines, and you will start realizing the market participants not necessarily know everything. Not all participants know everything. Not all participants know everything all the time, and still they take positions even not having a full knowledge of the outcome, but they know like there is an event. Once there is an event, they know like how the market has behaved before, irrespective of the result of the event. There are so many events have already that has happened, and market participants fairly know like how the market has behaved in that particular stock before the event and after the event. So based on those data points they do the trading, and not based on what will be the outcome. That is why most of the time if you see on the result day and onwards of the results day, there will be a fall if there is a pull up in the stock price before the results. If a stock is trading at 100 and before the results day if it starts climbing up, and by the results day if it is reached 110, in spite of a very fantastic results, it will start coming down because profit booking will happen, because the short traders will start covering up, and like the fresh buying may not happen immediately, knowing like market has started falling and it will come down, let us buy at a slightly lower level. So that is how the market participants think generally, and you have to keep in mind why you have to trade even on the events day. Just reduce the quantity, reduce your risk exposure by reducing the quantity and increasing your stop losses. In fact, many times in the volatile circumstances, people try to reduce the stop loss itself. I would instead say increase the stop loss on a big event day, but reduce the quantity. If you are trading 10 units, reduce the quantity to 5 units, and if you are having a stop loss of say 1%, then increase the stop loss to 2%. That way the amount that you are putting on table, the risk amount that you are putting on table will remain same, and at the same time you would have participated also, and if your view is right, then obviously you will get some decent returns on that particular trade. That is how you have to view. One, there is going to be a lot of events coming up all the time, some of the other events, so don't stop trading during the events day. Instead, reduce the quantity and increase the risk exposure to such an extent that your overall risk in terms of absolute terms is same as always. That is one. And secondly, start observing that, like, whenever there is an event, market participants, not necessarily all the market participants are not having any idea of what will be the outcome of the event. I think there is any stock which is having a event coming up in next 10 days. Look out for corporate announcements and pick up one stock which is having a corporate announcement in terms of results or something coming up in next 10 to 15 days, and then from today onwards start observing the price action in that particular stock. Not just the price action, even the volume action. Keep determining what are all the daily levels, keep checking what are all the weekly levels, keep checking what are all the monthly levels, and see how the run up to that event happens. And on that event day, just observe what was the price action. After the event has happened, just see how the stock has performed, what it did, where all it took support, where all it took the resistance, and how it started playing out after the event for next 10 days. So this is how you have to start reading the chart. By doing that, you will learn lot more information from the chart itself, and sooner or later you will start realizing you don't have to know the events. You don't have to really predict what the events will do. Instead, you will start observing the chart, and the price action with volume will reveal definitely lot more than the guesswork of the event's outcome. So that would be my take, and that is what I want all of the viewers also to do, especially if they are, like, in the learning phase. Start learning on these lines. Definitely it will help you in the long run. Having said that, have a profitable week. Hope the settlement will give you some money. Let us once again meet tomorrow with a fresh perspective. Until then, Om Swasti.